The US dollar is flying and the macros are incredibly strong. Is anything going to change? Let's break down everything you need to know. Morning, 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 baby. Happy Tuesday. I hope we are all well and truly led. Yes, let's jump straight into this rundown. Now, guys, look, you saw yesterday was a painfully slow day in the markets, especially when you look at the dollar related. We're just broad consolidation mode after. Obviously, look, guys, we have to remember we've been in a firm structure to the upside for the greenback. We're in this powerful run to the north. So naturally, Monday was just a typical Monday where markets were sitting on their hands, adjusting for this incredibly volatile week, right? We've got a host of key data, labor market data, GDP, all of that good stuff. And then just to add on to that volatility, we've got potential for month-end flows, right? This is the end of the month. So we do tend to see enhanced volatility exacerbating certain moves. So just sort of keep that in your minds there. Appreciate this Monday was calm. Things could start picking up pace today because we do have JOLTS job openings, which, as I say, kicks off this slew of key labor market data from the United States. And obviously really potentially setting the tone with this data today. All right. Now, let's just take a look at the dollar so far for the month of October, because we're heading into the end of the month now. By the end of this week, we will be in a new month of November. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon. And it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why has the price just spiked here because of this fundamental reason? I don't understand it, because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Now, look at how things shaped up there on a monthly for September. We formed what we could view as a potential morning star, set for the sun to rise, the price to rise. Big bullish candlestick here engulfing there for October. So real signs of continued potential upside pressure for the greenback. And when you look at this, right, on a naked chart, you could almost look at it as a bit of a, we've come to this bottom area now. We found decent demand, and naturally you can see where we want to head to in terms of next key monthly resistance would be up at around this mid 106 region, 106.35, 50 area. Okay, so that's naturally where we can see the price potentially pushing to the upside, especially if this data points. Okay, there's so many things supportive of data right now. Okay, just quickly go over. Okay, one, we have obviously this recent strong run of US economic data, right? Data has been consistently beating market expectations. Okay, and that has forced, as we said, and we'll just continue to go over. So, give me one moment. So it ingrains in your noggin. Okay, this is how we become macro beasts. It's in our blood, right? In terms of the macro movements, it's in our blood. So that's why we have to ingrain it. So all of that strong, so that's the first factor. All of that strong economic data has slapped the markets in the face in terms of them pricing in that 50 basis point cut, where they wanted that back-to-back 50 basis point cut after the September one, which was not necessary, as we went over before. Okay, so now it's the large probability that the rates are only going to be cut by 25 basis points at this meeting in November. Now, okay, so that's two things. So we've had strong economic data. We have a readjustment of rate cut pricing, as you can see here by the Fed Watch tool. And then the third factor, right, which is supporting the dollar, we've got the elections coming up. Do you remember how I tweeted and I put out in the community about the Trump trade? Trump's policies are going to be potentially inflationary. Trump wants to come in and hit the ground running, pick up where he left off previously when he was the president, and come in with these tariffs, making drastic changes, thinking about America first, these tariffs on China. Obviously, at the end of the day, a lot of US businesses rely on Chinese business, okay, and rely on manufacturing and goods to be produced in China, which they import them into the United States. But Trump wants more tariffs, which if he sets down some tariffs, right? And we could even have retaliatory measures coming into play from China. Anyway, all of that is going to be inflationary. Price of goods and services for these US businesses are going to go up, and they're going to pass that on into the consumer. So what's going to happen with inflation? Inflation right now is still sticky, right? We're still not quite down to where the FOMC wants inflationary levels. So if Trump comes in, market's going to be thinking about this, and then the actual impact of Trump's trade policies, if he implements them, right, is going to be inflationary. So what happens with interest rates? The Fed stops, completely halts this rate cutting cycle, and then they keep rates higher for longer. And then what is that? That's supportive of dollar flows. That's supportive of dollars. So we've got three big factors there supportive of dollar strength. The fourth one, remember this week back here? Yeah, that was obviously yes, we had NFP that week, but it was also really weird kicking to the upside, big safe haven flows for the dollar because of the geopolitical tensions, which remain extremely heightened, may I know, between Israel and Iran. Okay, especially with Israel striking those military bases in Iran, actually on Iranian land, is crazy. So now things could just any given moment, so markets are likely to still keep that in their heads in terms of those support for the safe haven flows. So almost everything is supportive of dollar longs right now. I will tell you when I think we are overbought, we're overlong the dollar. We're not. Given all those factors, we're really not, in my opinion, at this stage. Okay, we are really, really not, my friends. Now, obviously, this week, as I say, we're going to kick off with job openings today, which is expected. Numbers still expected to be healthy at 7.98 million. As I said in our week ahead rundown, when you look at the data this week, if we fast forward to non-farm payrolls, even if you look at ADP, right, we're expecting quite a drastic drop from the previous numbers. Okay, drastic cooling, which I don't think we'll quite see yet. I don't think we'll see that yet, that drastic cooling. Okay, so either way, given that these expectations are low, the economy's still running hot, by the way, still running warm. Given these expectations are low, we could beat this by a reasonable margin and the dollar's going to fly. Okay, so let's just sort of keep that in our minds. Today, the tone is going to be set with this job openings figure. Everything's still supportive of dollar upside. You see how strong the trend is to the north at the moment. Unless the data starts disappointing and we break this trend line. Look how clean that trend line is at the moment, just supporting the price. Look, I mean, bar that trend line, just this dips. Look, flag breakout. It's just been so clean to just keep pushing to the upside. So yeah, I don't see this slowing down yet, but we're going to really, obviously, we need to have our finger on the pulse with all this key economic data coming out from the United States this week. All right. Let's start taking a look at some of the dollar's peers and look at some trade ideas. Going over to euro. Once again, guys, if you found value in today's video, make sure you smash and subscribe that like button. This little snippet is just scratching the surface of the value that I'm putting out every single day via the TFTC premium community, where we're putting all these macros, all these key talking points, all of these themes. Our fingers are on the pulse. As I said before, the markets are in our veins, they're in our veins. So we're living and breathing this, and we're ready to see how these macros then transcend on the charts and how to capitalize on that, how to find actual opportunities and make money at the end of the day, extract money from these markets. That's key. Macro edge, baby. Other than that, stay lit, stay blessed. Let's get it.